Siyathemba nizolijabulela lolu hlelo.
Okay, bafundi siyabuya futhi sila kwi depreciation. Siyaqhubeka ne question yethu sikhave last week with our previous lesson. Income statement. Remember zange siyiqede. So we are still on the topic of the income statement. We calculate depreciation, right? We are here on calculation of the depreciation. We said there are two methods of calculating depreciation. A straight line method, or a cost price, or fixed installment method. And then there's carrying book value. It's the same as variable cost, EVC, right? Or carrying book value, or we call it diminished balance method, right? So kulama activity akade besiwenza ngicela uhambe check into yakho ya last week. Nansi income statement yethu esiyenzile lesikhathi esiphambilini. Nansi question azange siyiqede lapha mfundi, right? We said, okay, we were somewhere there. Okay, we did some calculations here, right, for everything, but the problem was towards the end on the depreciation. Abantu abaningi ke bacela ukuthi siqhubeke nale question, especially lapha kwi depreciation, right? So lapha esikhona ke njengamanje lapha kwi depreciation. Yini depreciation? I-depreciation ukuguga, right? Like if the asset is losing its value, we call that depreciation. For instance, imoto mawuyithenga, immediately na uthenga imoto la eThekwini uyidriver uyeZululand, uyifika ivalue yakhona isafani ngoba manje isinemaleji, isinama kilos, kanti uyithenga eThekwini wena ibiseseyintsha. So that is occurs whereby the fixed asset is losing its value. We call that depreciation, right? But unfortunately, land and building does not depreciate at high school level, it appreciates. Or if you go further with accounting, indeed, land and building does depreciate, a tertiary in terms of tsunami and so on and so forth, right? But in our way to high school, land and building does not depreciate, it appreciates. So let's have a look at calculation of the depreciation on our question. Remember, we are still on question 4. Remember the question 4 for last week? Yes. So what they are saying there on question 4, adjustment number 7. If vehicle is 15% on cost, we said the cost is the same as straight line, right? So that's the calculation yethu asishaye calculation yethu manje labafundi. Kulula ke lezi zinto lezi mangabe uzoyipractice, right? So today cost is the same as what? It's a cost, okay, it's the same as straight line, right? So what is the esitila ngayo for the cost vehicle? So it's a vehicle, right? If vehicle is 15%, so you go now and take the amount of the vehicle there, 814,000, right? This is the vehicle. We are told here on the adjustment that is 15% per annum. So you times by 15%, divide by 100, times by 12 over 12. Right? This is a straight line. This is a straight line here. The cost price. Cost price le fundi. It's the same as a straight line. Straight line, right? Or we call it fixed installment method. Fixed installment method, right? So let's go on the calculation. Take your calculator now. 4,000 times by 15%, times by 12, divide by 12. So we are getting now 4,000 for the first one 122 100 is nansi figure la esitholayo mfundi, nansi figure la uma calculate, right? How to uyayibona phana figure. So that is the first depreciation of the vehicle. So now we go to the equipment because there are two. Equipment. On the equipment, khona old and the new. So equipment, there's old. Lapha ku vehicle it was only the old one. So this one was old. There was no new or sold there. Right? The old. Okay, let me use another color. The old vehicle. What is the cost? Okay, what is the figure of the vehicle? It's 616,000. We bought a public screen. So we are told here that we have to use a diminished balance method, right? 616. Okay, and then there's an adjustment that says, note, new equipment to the value of 48,000 was purchased on the 1st of September 20.7. This has been correctly recorded. So which means here on this amount there's an amount of, or there's a vehicle that was sold equivalent to what? 48,000. So we have to take it out, right? See, I keep here 48,000 because it dies. So ngeke sisayibala lapha, yabona? 48,000 siyamkhipha 616 minus 48,000 minus the accumulated depreciation of the equipment. Remember, a formula is very clear. That's the formula yethu. Remember, the formula is set. We set okay here. Yes, we set amount less accumulated depreciation times by rate times by a time, right? But la ngoba khona edayisiwe, so which means we keep and then we less accumulated depreciation times by rate times by time, therefore we get the amount, right? So it's how much you get imali accumulated depreciation equipment. Equipment, it's 341,000. 341,000. That's an amount accumulated depreciation. Okay, we get the actual A. So let's calculate again now. 616,000 minus 48,000 minus 341,000. So we get 227,000, right? Times by what? Times by the given percentage. What is the percentage? It's 10%, right? Always old sometimes I'm 12 over 12. Njoba senzile lapha kwi vehicle, right? So if we times by 10, the last zero is gone. So which means we are going to have now 2. See, 0 is gone now. It's 10 times by 10%. Yeah. So, and then there's a new equipment, still equipment, but the one that we purchased new, right? How much we purchased this one? We are told there is 48,000 on the information, right? Times by 10%, divided by 100, right? Ihlale for how long? For how long this this thing? So what you have to do, you must do a cycle njengoba bengenzile eqaleni, right? Wenze njenge wash 6 9 12 3, yabona? Bese kuthi in between uthi 1 2 1 2 1 2 1 2. So it's no January, it's no February, it's no March, it's no April, it's no May, it's no June, it's no July, August, September, October, November, December, right? So I check out when is our year end. We're told year end here to what? 30th of June 20.8. So June 30, 20.8. So when is the date of commencement? Date of commencement, it's the 1st of July. Always the first day of the following month, the previous year, right? Of July 20.7. So siqalela sahamba, there's a year end, right? There's a year end there mfundi, right? There's a year end. Sibeceni lokhu sobuye sikubone. Now let's go and check lapha kuthiwa sidayise nini leyana. Sidayise nini? The new equipment to the value was purchased on the 1st of September 20.7. So la on the 1st of September 20.7 sayithenga. So the sidayisile ne siyithengile noma? Yes, I mean the new equipment to the value was purchased. Yes, siyithengile. So it came in on the first day of until the year end. So which means in a isikhathi esingakanani ke manje? 1 2 3 4 5 6 7 8 9 10. So which means in a 10 months, right? In a 10 months. So this is 10 divided by 12, right? So which means now la usuzothini ke manje? Uzothi 10 months divided by 12. You see, ubala isikhathi efike ngaso. If mhlawumbe bebesidayisa bezobala ukuthi, which means ihlale for how many months? 4 months from 2 months from 1st of July until the 1st of September. So I mean le ina ngoba siyithengile. So from September up until la esikhona isikhathi esihlalile ke yiso leso. So uthole bali manje 48,000. So la calculator ke now 48,000, right? 48,000 times by 10% times by 10 divided by 12. Uthole 4,000, right? So you get 4,000, right? And then now so you add ke manje yonke i-depreciation yakho. 4,000 lo naye plus 22, the old one 22,700 plus le ya, okay, le yana elapha phezulu ye, okay, nathi usuzo add this one nale ozoyi-add ka old bese kuba eka new, right? Plus 122 100. Kodwa ufune udisclose ke lokhu mfundi, ungaveli uqhubeke nefigure nje. Now usuya ku information yakho ke manje. Usuyayiqala ngeyokuqala i-depreciation eye vehicle, right? This one is for the vehicle. 122 100. Nansi leyana esiyicalculate lapha eqaleni, nansi le yase eqaleni. This one is the first one. And then this one is the second one. Isibili leyana, isithathu le. This one is for the third one. Yayibona? So you are add all the depreciation akho la, must show it here. Kodwa ungabhali ukuthi equipment or motor vehicle, no. Just write only the figures. 22 plus 4,000. Right. So 122 100 plus 22. You must use a calculator even yourself at all times. Try to use the calculator that you are familiar with. Don't use another model of calculator, especially in the exam. So when you look at slow 14, right? That's a figure there for total depreciation, right? Sesiqedile with our income statement. Sesi our add ke manje onke ama operating expenses wethu siyawa add. We go even nakulawa amanye kade besiwenze phezulu because now we are using a double page. So now usiya add manje onke lama expenses lawo, right? Now you go at the beginning, so add all these operating expenses lawo, all these operating expenses siyawa add onke imali yakhona bese ke sisibhala la in brackets. So if we are add onke lama figures lawa uzothola bani? Uzothola u2 239 sorry, thola u239 600. Okay, we can prove it if you like. Add yonke lanto lapha ezansi. I mean lapha kusukela phezulu kuze kufike la ezansi. That's the figure that you'll get. And then usuthi le figure le ye gross income, right? Gross income minus operating expenses. Usuthola ini manje i-operating profit lapha ezansi. Usuthola ini manje lapha ezansi operating profit. Operating profit or operating profit for the year. Noma ngabhala unje profit kuphela. So ke sesiya calculator ke le figure together. You are saying now 303,460, right? Minus 239,600. Not 600. So you get now 639. You get now 639,860. That's what you are getting. Okay. That's what you are getting. Okay, that's what you are getting here. Okay, that's the figure that you'll be getting there as an operating profit for the year. Remember, then now you'll be having note number 1. What is note number 1? It's interest income. Interest income, right? Ama interest income uke mfundi, ama interest, ama assets. As long as ku asset nje is an interest income, right? It can be so. Okay, let's just do it. Let me just show you how to get the interest income, right? So interest income, right? Interest income can be through all the interest of the asset. It can be interest on fixed deposit, interest on fixed deposit, this is number 1. Number 2, interest on fixed deposit, interest on investment, right? As long as if it's an asset and there's an interest, it's not number 1, interest income. Interest on savings account, interest on savings account, interest on smart account, all these. So basically these are interest of the assets. Interest of assets are interest income. So let's come back on our activity. So let's check imapha my interest of the asset that we have, right? Let's go and check the interest of the asset that we have, right? So sinani ke thina lapha now we are told information we have interest. We have interest income ka 26,630. So yoqala leyo siyayibhala ke leyo we are given 630, right? Yesibili khona i-transaction kwesibili. Adjustment number 3, make provision for the outstanding interest on a fixed deposit. This investment has been inexistent for the entire year. Interest is not capitalized. Very important, not capitalized. What's the meaning of that? It's not added, right? It's not capitalized, right? I always tell abafundi, please try to read the transaction more than once, so that uzo understand ukuthi kuthiwani. Bakwethu isilungu akusisona esethu, sisibolekile. Izwa kahle bese usuyaphendula ukuthi kuthiwani. I'll read once more. Make a provision for the outstanding interest on fixed deposit. Investment has been inexistent for the entire year. Interest is not capitalized, right? So which means we have to go now to the information. Pre-adjustment trial balance yakho. You go there, nansi figure sine fixed deposit lapha ku balance sheet account section. You times by 8%, nang umnezo lapha u 8%, right? 495,000, right? times by 80 divided by 100. You get the final figure. Yabona ngisho nathi figure sesitholile la. So le figure ozoyithola angisho normally say A plus B equal to C or A minus B equal to C. Sithola u C because this one is for the year. So which means 39600. So ke sesiyazi ke ifigure esizoyithola lapha phakathi ukuthi iyipi. Usuthi le figure le minus le utholile ephakathi. Minus 26630. Right. So which means lapha so plus ubani u12, so the remaining plus u12 nangu 12 lo kade simbala u12 970. Okay, let me just do it once more. So you go there ku figure ye fixed deposit lapha ku balance sheet account section u495000 in brackets kune 8% lapha times by 8 divided by 100, right? Uthola u-C straight your final answer because the transaction is very clear. It's saying make a provision for the outstanding or the fixed deposit. The investment has been in existence for the entire year. Remember, every time if we are doing income statement, we are doing income statement for the year ended. Our financial statements are for the year ended. Balance sheet for the year ended. Cash flow is for the year ended. Audit report is for the year ended. Everything that we are doing is for the year. There's nothing that is not for the year. So the difference in now between this and this will be this one, right? Is because we are told twice for the year. So we are done with note number 1. So now we have to add, right? So we're adding now this plus this, right? Operating profit plus interest income plus 639,860. So you get 679,460. So that is what interest before note number 2. So now you get what interest before note number 2. Interest before interest expense. Right? Before interest expense. That's the figure there that you are getting. And then, so manje note number 2. I'm not sure to tell note number 1, ama interest, ama assets. Note number 2, ama interest, ama liabilities. Okay, let me just write it down for you here once more. Okay. Ngifuna uyibone kahle lento lemfundo bese sobuye siqhubeke la. Sing note number 2 now. What is note number 2? Interest expense. Interest expense. We're about to finish our balance sheet. Interest expense. That is note number 2. Right. What is note number 2 basically? Note number 2 is this. Interest. Right. Interest. Okay, we said notes. Right. Note number 1, we said interest income. Right. Note, okay, what interest income? Interest, okay, interest on fixed deposit. Interest on investment. Interest on overdue debtors. Overdue debtors. Interests on smart account. As long as if it's an asset, all interest of the asset, all interest of assets is not number 1. Right? All the interest of the asset is not number 1. So now since note number 2. What is note number 2? Interest expense. Interest expense. Okay. Interest expense. So now note number 2. Interest expense. Right? So interest, okay, interest on loan, interest on mortgage bond, interest on overdue creditors, overdue okay, interest on overdraft, interest on over. So which means all interest of liabilities. Right, all the interest of the liabilities in fund. That is note number 2. Right, all the interest of the asset, note number 1. Okay, let's finalize again our activity. Let's come back to our equation now. Let's come back on the question. So we're on interest expense. So since I check out what equation iphethe maphi ama interest expense, which means ama interest ama liability. Yiphi ekhona according to the question, because thina si-answerisa equation la mfundi. Siphendula equation. So eyokuqala sinikeziwe lapha adjustment number 8. Cela ucheck number 8. Sinikeziwe lapha eyokuqala on adjustment number 8. Yabona lapha ezantsi. Okay, let me just check the questions what I will point. Right? Okay, firstly, okay, I check on the question la ukuthi ayikho nesinikeziwe, ayikho esinikeziwe lapha. Okay, it was only the fixed deposit. Nansi eyokuqala sinikeziwe lapha ku number 8. It's very simple. Okay, let me just put the question paper. Napho lapha yabona? Nansi lapha. Adjustment number 8 sinikeziwe. Yabona? So as soon as you see a question like this, put the brackets here. You can see? Let me just put the brackets here. You see? Yeah, I'm using the red pen there. Balance at the beginning, repayment during the year. So where there's repayment, put the brackets. And therefore, there's no amount of the interest, and there is what? Balance at the end. So that's an amount that we'll be using for the balance sheet. Right, this one we'll be using for a balance sheet. Right, so what we're going to do now, we want to get what is missing here, interest on loan. This is a loan, but we are not giving the interest. We can even go up and prove this figure, or we can even go down and proving that figure. So we can say 804,500, right, plus, because we are going up, plus 458,000, right, minus 112,500. So get what? So the figure here, it's 13. Okay, ngizophinda futhi ngibhale kahle ephepheni. So there's the figure that you are getting. Okay, let me just write it nicely so that you will see. Bengifuna ubone from the source, from the source of the question. Okay, I'll write down, because maybe umuntu othi akubonakali. No ke mangasabonakala umuntu ethi akubonakali kodwa ekubeni ubonakala. Okay. So nathi into oyinikeziwe mfundi, nathi into oyinikeziwe, nathi into oyinikeziwe. Cela ubheke lapha on your question 8. Right? Sine loan lapha ngithe any interest of the liability is note number 2, that is for interest in expense. So sine loan. So we balance at the beginning. Balance at the beginning of year. Sinikeziwe. Nansi balance une table lapha. I'm rewriting this, is right in front of you. 1125. Okay. Right. And then repayment. Repayment, sometimes they can say installment during the year. During the year. So repayment is skoka 458,000. So it's in brackets. As soon as you see repayment, put the figure in brackets. In brackets. I'm the one who's saying put it in brackets. Right? And then interest capitalized. Interest capitalized. There's no interest, right? And then balance at the end of year. The balance at the end of the year, we have 404,500. You see, if you go down, you have to say this minus this plus this is equal to this. But you can prove it going up because nansi into esifuna thina interest yalapha. So what are you going to do now? You're going to say this one, because if you go up, you must do the opposite, right? The balance at the end plus repayment minus this one. Most definitely you'll be getting 137,500. Okay, let's do it together. So 804,500, right? As now langiti plus this one plus my brackets 45. Why we are saying plus? Because we are reversing, we are going up, right? Minus 1,125,000. You see, that's the figure that you get. So that figure is what? It's a figure of note number 2 for our information. So now for note number 2, let's go back now to our. So that's a figure that you've been looking for. That's a figure H. Thatha le figure lena sesiyoyibhala straight laphana engu 137 in brackets. Remember, figures we income statement about my brackets out for cost of sales, right? Operating expenses, note number 2, this one, as well as taxation. Okay, kwa grade 12 ama-figures awu-4 kuphela abakuma-brackets mfundi, awu-4 kuphela ama-figure ama-brackets. Eyokuqala, i-cost of sales ekubama-brackets, eyesibili, operating expenses, eyesi-3 yiyo le note number 2, bese kuthi eyokugcina i-taxation. So now sesithola ini manje-ke manje? Sesithola in-net profit before tax. So now we are saying this figure minus the figure kade siyithola, sithole in-net profit before tax 679,460, right? Minus 137,500. So sithola manje ubani u-541,960. What do you call this figure? Profit before tax. Profit before the tax. You call this profit before tax. Right? Profit before tax. You are saying interest before. Okay, that is okay. This one, interest before interest expense minus interest expense, you get a profit before tax. Because of space, we have to add any page so that you can continue with our income statement. Okay, let's check it side in. Fine. Now we are going to the taxation. We are about to finish now grade 12s. So, sinani manje lapha sine taxation. Taxation. Right, taxation. Let's read la uthi bathini ke ngo tax. Okay, ithini? Sorry, profit before tax, taxation, and okay, it can be net profit before tax or just profit before tax. Okay, profit after tax, profit after tax. Before tax will be always 100%. Let's go now and read bathini ngowe tax lapha. The last adjustment 30%. Right? So taxation, we are told that taxation is 30%. So before tax will be always 100. So look, our tax, so it's not 30% taxation yethu, right? If before tax will be always 100%. Always 100%. So it's obvious after tax is 70%. We are one. If before tax will be always 100%, and therefore sengadependa ukuthi ke sikhokhe kanjani. If maybe it's a good business, mhlawumbe is 28%, maybe business likhokha mhlawumbe it's plowing back to the community. Khona mhlawumbe ama initiatives elwenzayo ku community in terms of the CSI, mhlawumbe lakha izikole noma mhlawumbe i-developer i-youth noma mhlawumbe lakha ama-computer lab and so on. So it's obvious that business won't be taxed normal. In this country, companies are being taxed with 30%. That is the standard for the companies. If the company is paying less than 30%, so which means that company is doing some initiatives in the community. It can be in a form of building a computer lab or supporting sports or any whatever initiative. Therefore, they will be paid less in terms of tax. So, very simple. We are saying now our profit before tax. Now the profit before tax is 54190. Now 54190, right? You times it by 30%. 30%. You get what? 16,2588. So which means yes, nobody. No 16,2588 in brackets. Remember, I said our four figure with income statement angena ma brackets, right? Stay in cost of sales, ASB, operating expenses, AS3, interest expense. Kade besiyenza lapha ku table le loan eyogcina nansi ke. So now usuthi manje suthola this one ke manje futhi this one minus this must get in net profit after tax or profit after tax. So mawutha la ungabhala ukuthi net or net lawa net mawuthanda. Okay, nala futhi net. Okay, so calculate ke la sithole ifigure. So the main aim of doing income statement is to get the correct net profit after tax or profit after tax. So sinobani laphana? Sino 541960 minus 16,2588. Sinobani manje u-3,379,372. That is basically the amount that you've been looking for, right? That's an amount that you've been looking for. Therefore, our income statement is complete now. Sometimes you may find ukuthi kufuneke si reverse. Angisho sithela lapha 100% before tax. Sometimes utho ukuthi bazokunikeza le figure le abanginikezanga la ama figures lawo, and then maybe you be told ukuthi I tax rate ubani 30%. You can even go back uthi where you are going divide by where you are coming from. Okay, let me just show you. I mean, assuming ukuthi asinayo before tax, right? Si assume mfundi ukuthi asinayo before tax, right? Sino after tax engubani engu 379,372. Sifuna before tax, and tell before tax will be always 100 times by 100, right? Okay, divide by 70. Most definitely, if you calculate lapha uzothola bani napha asipunch. Ungazuthi bevele seyibalile 379,372 times where you are going from 7. I mean for 100 you are coming from 70. So thola bani 541960. Same thing now with taxation, can use the same. Let's say maybe asinikezanga le plus le sne only after tax. We are saying 372 times where we are going to 30, we are coming from 70. So you get the answer of what? Of 16,2588. Let's say answer 40. It's very simple. 372 times by 30 divided by 70. There you go. You get your taxation. So you can play with these figures up until you master it. Practice, 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 and more practice. So ngicabanga ukuthi ke mfundi ke ngizamile ukuthi ngikubonise ukuthi how to manage to do income statement, but we still have another question ngoba isikhathi ngathi sisavuma. Mhlambe we can even take another question noma ngazange sineke sisayiqeda yona due to isikhathi ngoba sesuke suspenda kakhulu isikhathi kuleyo yokuqala ngoba vele ibiyinde kakhulu, kodwa futhi into bekubalekile ukuthi uyibone ukuthi ihamba kanjani. Let's go maybe to question 6, if I'm not mistaken. Yeah, I think it's question 6 there. Question 6, yeah, question 6. Let's go to question 6. Okay. Yes, let's go to question 6. Question 6, nakhona we are repeating one and the same thing mfundi. Remember, amehlo akho when it comes to the income statement, funeke abe nominal section. Remember, a balance sheet is divided into 2 sections. There's a nominal account section, there's a balance sheet account section, right? So your eyes must be always on the nominal. About 95% of your eyes must keep it on the nominal, because that's where lots and lots of information you have to get. Yes, now and again you can have a look at the balance sheet account section for things like provision, calculation of the bad debts, and the trading stock deficit or surplus. But most of the time, keep your eyes on the nominal. Therefore, you'll be saving time if you do that. It's very important to understand where to get the information, right? Maybe let's start doing this question of question 6. Right, let's start doing that. Okay, the question then from question 6 is taken from this company, Winka Ltd. Right, income statement. Okay, Winka income statement. Income statement for the year ended. For the year ended 30th of June. 30th of June 20.3. Right. So the year end is 30th of June 20.3. So when is the date of commencement? It's the first day of the following month, the previous year. I repeat, the first day of the following month, the previous year. So let's have a look. So we're going to say sales less cost of sales is equal to a gross profit. Gross profit. After gross profit, suti other operating income. Other operating income. Then senga depend on operating income onawo based on the question. It can be any other operating income fund ongawathola, right? So into esinayo ke la ku question 6, right? Ama sales aswanikezwanga, right? We are not given the sales. What is it that we are given here? Okay, let's look nama cost of sales futhi azange basinikeze, right? So iningi into abayibhalile lapha sinikezwe ini imarkup lapha adjustment number 3, right? Ama sales abasinikezanga sinikezwe imarkup adjustment number 3, right? They are saying goods are sold at a markup of 70% on cost price. The company held a discount cash sales during the year to clear excess stock, right? The total of trade discount given customers was 710. I repeat, as I said before, it's very important ukuthi i-transactions uwafunde more than once so that uzo understand kahle ukuthi kwenzakalani, right? Goods are sold at a markup of 70%, right? On cost, right? The company held the discounted cash sales during the year to clear the excess stock. So we want to clear the excess stock. So there's a stock that is in excess. So we want to clear it by reducing, by giving the discount. Total of the trade discount given to customers is 710, right? So very easy. Let's go to our transaction. Okay, this is adjustment number 10. Okay, let's go now to that transaction. So number 6. So we are told there how much we are given for the sales. Okay, the sales figure is question mark. Interest is 33. Profit and loss. Let's keep on reading. Okay, and then we are told down there net profit after tax. Okay, we are given an after tax. We are also even told about the shares. Okay, they were telling us about a lot of things. Okay, here. Okay, but our focus is it's on the sales for now, nothing else, right? It's on the sales. Okay, there on the sales. Okay, what we have to do is this. So we have we have 9,000, sorry, 9 million. It's 9.4 million, isn't it? Yeah, 9.4 million times by 9.4 million. So what is it here that we are given? We are given the cost. Okay, we are given the cost. Okay, in the question paper, sorry, in the answer book. Okay, cost we are given. Can you write the cost? The cost is 9.4 million, right? Yes, the cost is 9.4 million. Okay, can you just write this one in brackets? We are given this one, write given. Okay, you can write like this. Good to see nikeziwe cost. Okay, it's already written in the answer book. Cost. So tilinte sifuna yini ama sales, right? So if you calculate ama sales given the cost, is very simple. Everything emanates from here. Emanate from 100 divided by 100 from this fraction. Calculation of the sales, right, is equal to 100 divided by 100, right? So if you calculate for the sales, it's obvious you are having the cost of sales. We're going to say cost of sales times by 100 over 100 plus the markup here on the numerator. If you calculate for the cost of sales now, calculation of the cost of sales, thank you, you are saying 100 over 100 plus the markup on the denominator. So in this case, we are calculating for the sales. We already have the cost of sales, 9.4 million. 9.4 million times the markup we're told it's 170, it's 70. So which means here it's 70 plus 200. Therefore it's 170 divided by 100. Sithole i-answer esizoyibhala laphana ke manje. Siza calculate ke manje. So manje 9.4 million to 3 times by 170 divided by 100. Uthole i-answer yakho ke lapha engu okay, because now there's a discount, we must less that discount of 710, right? Okay, let's do it together here. So because there's a discount, there's slightly different. So we're going to say 170 divided by 100, right? Minus that discount in 710. You were told about that discount in 710, remember, on the adjustment. So you'll be getting Fundi your figure there. Let's calculate 9400,123 times by 70 divided by 100 minus 710,000. You are getting now what? 1,527,70,000. So you get your gross profit engubani engu 5,870,000, right? And then usucheka amanya so much you have to say this minus this, right? You get this one. And then now usucheka ini amanye ama income that we incurred while we're operating. It's no rent income that is coming here. We have bad debts recovered, bad debts recovered or recoverable, bad debts recovered. We also have a provision for bad debts, adjustment. So those are so which means adjustment here, it was an income, so which means it was more, right? So I think let's have a look at the one of the rent income. Let's have a look at okay, let's have a look at let's have a look at the rent income. The rent income increased by 15%. Okay, quickly, let me go. So we do have the figure of the rent income, the opening one, plus the one that is increased by 5%. Let's have a look at the question quickly. Rent income increased by 5%. Right? So the rent income, it's 200 plus the one that increased by 15%. So now you come here, you do this, right? 1 2 1 2 1 2 1 2. So January, February, March, April, May, June, July, August, September, October, November, December. When is our end? 30th of June 20.3. So date of commencement siqale lapha ngo-20.1, I mean 20.2. Ithini transaction yethu increase by from when? Ngo-March. So ngo-March 20.3 iya increase ngo-15% on the 1st of March, right? So for how long? So which means inyanga lezi ezinye ibinga increasanga ngo-15%. So which means it was 100%. 1 2 3 4 5 6 7 8. So for 8 months it was 100%, right? And then for how many months? For one, because here we're told increase then up until 2 March, right? From March, right? From 1 2 3 4 5 6 7 8 up until 2 February. Then more March it went up by 15%. That is 1 2 3 4. So 4 months increased by 15%. So which means from 100 plus 15, you get 115 equal to rent income figure. So which means now 800 plus, you have to say 4 times by 115. Can I just finish this one? You get 460, right? What is our rent amount? Quickly, the rent amount was how much? It was 200. Okay, so you are adding now these two, right? 800 plus 460, you get 1260. You call this known. And then now you are saying unknown divided by unknown times by rent income over 1. So unknown is always this plus. So unknown is 115 because we don't know how much the rent before it went up by 15%. Divide by unknown on 1260, right? Times by rent income 200 over 1. Okay, so you get your answer here. So you are saying 115 divided by 1260 times by 32200. So that's a figure that you are getting there at the end. Unfortunately, this card is pelile, but that's how you calculate rent income if you are given a percentage. So you can bring those questions if you are practicing. There will be no way up until you don't have questions in accounting. You must always practice. Otherwise, you'll get there most definitely. Thanks so much.
Ningakhohlwa ukuthi nisengathokozela ezinye izifundo eziyisithupha kanye nezengeziwe i-learner wellness, i-career guidance kanye ne-advanced program. Hlanganyela nathi kwizifundo ezi-online ku-068 151 1072 noma ku-GoDigi@godigitalsa.today. Siyabonga.